S&P 500 volatility has not exploded yet. As we do know, Jerome Powell came out at Jackson Hole like the boogeyman in a very short speech. You can see the little SpongeBob's watching very patiently as the Fed said and warned of more pain ahead. How did the markets respond? Well, price action in and of itself went screaming, sending the Dow Jones down around 1,000 points, bringing it down 3%. You can see all 11 sectors in the red, massive moves to the downside. However, what did the VIX term structure do? Well, it didn't do much, and we're going to be talking about that in today's episode of the Stock Market Brief. My name is Michael Silva. We got a lot to talk about, so let's go ahead and get right into it. All right, everybody, welcome back. We're going to be focused on the S&P 500 today. Towards the end of the episode, I'll show you the expected moves for the other index products. But yes, Jerome Powell came out in a very short speech at Jackson Hole, and it sent the markets a little haywire. And while I'm kind of saying right now that, we haven't actually really seen volatility yet, we'll get into when we kind of dive more into what took place with the volatility index momentarily. But let's take a look here at what Powell said. He had mentioned restoring price stability will take some time and requires using our tools forcefully to bring demand and supply into better balance. Okay, continue on. Reducing inflation is likely to require a sustained period of below trend growth. Okay, there's a warning sign where they say don't fight the Fed. Well, we're getting our warning signs right here. Moreover, there will very likely be some softening of the labor market. Okay, well, the labor market has been seeming a little skewed, and now they are saying that, we might be seeing that right here. So softening of the labor market conditions. So while higher interest rates, slower growth, which we've seen that already taking place, and softer labor market conditions will bring down inflation, that will also bring some pain to households and businesses. This right here is basically saying, hey, we're going into recession. And we're going to try to do a softish landing during it, but there's no promises as of right now. So they're going to keep continuing to raise rates until most likely something breaks. That's what I'm getting from this. That's just a narrative, but let's continue on. These are unfortunate costs of reducing inflation, which inflation is entrenched in our economy, and it is now entrenched globally as well. But a failure to restore price stability would mean far greater pain. So as this stands right now, Jerome Powell is coming out and saying, and not even leaving room for interpretation because they didn't take questions or anything, that they're going to continue the path, and there's not going to be a pivot right now, at least. Even though that people are predicting that a pivot's going to come and fall, they might be right, but as it stands right now, clearly that's not the case. Okay, so we got to be very careful here. The S&P 500 finished outside of its weekly expected move, doing a 2 sigma move or 2 standard deviation move, which we discussed in ad nauseum all week last week after Monday, right? At Monday, hit the lower edge, then we kind of skirted around. On Thursday, we bumped up, and we still talked about just how careful you need to be, given that if we start getting outside of these weekly expected moves. And you can see that here. If we take a look at like the 15-minute time frame, the entire week, that orange line, it was skirting on that weekly expected move. We had mentioned if it starts getting outside of it, remember, creates more positive delta. And if you are, if you are a firm that is trading around delta neutral and you're getting more and more positive delta, well, you need to sell into that selling, and then they go into the S&P 500 futures to do that. And what you typically can see if we start breaking further and further out of these levels, you see volume start to pick up, which really identifies, hey, something's taking place here, be very careful. And that's exactly what happened as we talked about this day, and this day. Okay, so hopefully you are aware. Hopefully you were prepared. Hopefully this isn't some shock to you that we saw the market move. Okay, that shakeout period was definitely that even got me off a little bit off guard, but it still didn't change the overall positioning from understanding the bigger trend here. So in the midst of all this volatility, we need to pay very close attention to key levels. Where can we potentially go? Where can the market potentially bounce? Well, we talked about the JWAP indicator, which is kind of a joke, right? But what we're doing here is essentially anchoring a VWAP to all the times that Jerome Powell spoke most recently, the last five, 6 times. And what we noticed was when we market, you can see that price action, which we already know, when Jerome Powell talks, the market listens. That's why we're doing that. We saw that big move to the downside. It bounced up and just kind of within these anchored VWAPs. Once we broke outside of these, we back tested and we started perpetuating higher. This is about the time where we talked about the JWAP indicator, where we kind of anchored them all together to see where they could potentially be. And we noticed that, hey, right here creates a sort of a zone, a sort of a band right here that can potentially act as a level of support or a level of interest to pay attention to. And that brings us to around 395 to 400, which we term the JWAP zone. Now, if you also look to the left of the screen, this is really where that rally started kicking off in the S&P 500, drawing the market up significantly higher. So not only do you have where the market picked up in volume, but then it also lines up with this area here. Yesterday's price action or Friday's price action, we saw just a significant move to the downside. So if you're paying attention to these levels, say the lower end, 395, potentially even to fill this gap, okay, these are going to be very important levels to be aware of, especially if you're like, all of a sudden saw the price action and you're shorting into the hole here. You can get lucky, but remember the snapbacks can also be quite significant as well. So that is a very important zone that we'll be paying attention to next week. You might be wondering, okay, what happens if it breaks? Well, it's too hard to determine really what happens if it breaks. This was a very substantial move. There's going to see bounces. It's obvious. Think of a rubber band. When you stretch out a rubber band, so here's a rubber band, and if you stretch it out like this and let it go, it's going to snap back, right? We always talk about contraction leads to expansion, right? Boom, 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 to contraction, to expansion. And that's it, that's what we're seeing right now at this given time. Now, what do I mean by the trend? The trend's still lower highs, right? So we had this monster rally to a declining 200 period moving average, and we started seeing some weakness. We're going to talk about the expected move for this week, which is even predicting potentially more volatility, right? Last week was about an $82 move. Now we're looking at over $100 expected move. And guess what? Guess what here? Let's go ahead and zoom in. The expected move brings us where? The lower edge brings us to where the rally kicked off. 39.50, that lower edge, which also matches up with the JWAP zone. Okay, so be very aware down here. If you're holding short and it comes down to this zone, this could be, especially if we just open up, you never know, right? Last Monday, we opened up on the lower edge. So if we just have some monster gap down and it comes down here, just be aware that that's the lower expected move. So the same rules apply as we talked about last week. 2, chances are we'll probably have some massive covering and you'll see some wicked movement where we could very well just tread the lower edge. But understand also, right, this move, most people might think, hey, this is capitulation. That's not capitulation. I'm sorry, that was a very strong move, but for that amount of volume, it was actually rather meh. It's nothing in my opinion. And remember, that's just an opinion, but here, yeah, it was definitely a distribution day. It was a big move to the downside on increased volume, so it could be the start of something bigger, but that is not capitulation. No way, right? Even over here, we saw some more capitulation at those levels. So that could be bullish, but that could also be very bearish, especially if we continue to see some distribution days pile up on each other, okay? Now, if we zoom in even closer, look at a 65-minute time frame. We talked about where the rally kicked off right here. Boom. Started moving up, right? It started holding a support, and then we broke down a bit on Monday, and we came back up, right? That little fake out, and then crack right down through it. So we are below the VWAP from where the rally really kicked off into high gear. This right here is the VWAP of the bottom, which is really actually when Jerome Powell talked too, and it brings us to that JWAP zone. So we're looking at 39 to 400 is going to be a very critical key level. If we get through this, okay, if it slices through butter, if we come down and we start, bear flagging, or if it can't really get back up on its feet and it cracks it, the next main level of interest is going to be the bottom. It's going to retest the bottom, okay? So if we get through this, that would be my ideal next critical level. So critical level zone 1 is right here. The next critical level is going to be right there. That is what I'm paying attention to. That is from a bearish standpoint if it starts cracking down through those levels. All right, we'll talk about a bullish standpoint. Right now, actually, I'll just talk about it before we get into the VIX term structure. To be more bullish, I want to see this day recovered. I want to get back above 420 because this right here was when Jerome Powell spoke, right? We got hit to the downside pretty significantly. I think that if we can just get and recover those levels and hold above it, that would be incredibly bullish in my opinion. So that is also from a bullish standpoint what I'd be watching for. Understand also the 5-day moving average, we are still below it, and it is declining on all the indices as it stands right now. By the indices, I mean the SPY, and then also the Qs and also the IWM. Now, let's talk about volatility. Volatility shot off, up 17%. So you're thinking, what do you mean? Like that's a big move, right? Or is it? Well, we'll talk about that here. It is getting overextended, so will it subside? Yeah, it's a possibility that we see some subside a little bit, and maybe we have some covering, potentially just lack of sellers. It just kind of subtly moves to the side for a little while. We'll see. But this is where it gets interesting. We saw a pretty large move, right? We closed at 25.56%. And if you look at the data here, right, so 25.6%, that's where the VIX closed. And if you look at volatility futures, what are volatility futures? You can have, oh my gosh, it is very extensive, right, learning the intricacies of volatility. And that's not what I'm here to do, but I want to point out something very simple, okay? If you look at volatility futures right now, so you look at, and by the way, just so you have an idea of volatility futures, this is not something that I would ever trade. You need to be... One, because you typically see very low volume, okay? For the most part, ignore all this. But if you go to like, VX on Thinkorswim, you can go into the option chain and see, how much volume's traded. It's typically low, but they are huge contracts. So the people that are trading these you got to be on top of your game. Like, these are professional traders. They're very smart people, okay? And what I'm seeing here is, if you just look at, we'll skip that one. We'll look at September, right? You have October, November, December, and what we're looking at here is just basically the term structure. So if I slide over a little bit more, this will give us a chart which is more easy to depict. And I want to make this so it's very easy to, if I start using big words and big jargon like contango, backwardation, all that crud, let me just simplify it, okay? Here's the term structure. This is what the VIX looks like, okay? And basically what we're looking at is contracts that expire here in September, October, November, December, and it tells you where where it is, where are they according to the VIX index level. And what this tells me here, right? This is contango. This is quote unquote contango. You see September is right here. It's below October. October is below November, and so forth down the list. So what does this mean? This is normal. Why is this normal? Well, it's basically stating that the market is saying, hey, we're going to have more risk in the future. That's how it always is, right? If there's nothing big happening right now, right? If the market's not interpreting a big risk event in the current state, you'll see it like this, because they're always going to predict more. There's going to always be some sort of future risk. Okay, so this looks normal. But what I find so interesting, and this could be from a bullish perspective and a bearish perspective here, is we just had a massive kind of a news event, right? Jerome Powell came out. He was, very hawkish. The price action, as we previously stated, right? Looking at SpongeBob, right? Went crazy. But the VIX term structure, did it go crazy? No, it didn't even budge. Hardly, right? You can see right here, we did not even surpass October. So it's basically still saying, yeah, no, we still see October as being, more risk kind of out as we go. Whereas, and this could be bullish, right? Because this could potentially mean that yesterday's trading day or Friday's trading day was kind of a non-event. Yes, it looked like a big event as far as price action goes, but the smart money right now is saying a couple of things. It's saying, this is, it's nothing. That's what a bullish person would assume, right? So, and remember, risk is plus or minus. So a bullish person looks at this and says, yeah, that was a non-event. Chances are we're going to start bouncing and we're going to start taking out the previous high, which we pointed out, okay? So that's why I'm looking at getting back above this level to be more bullish, okay? Boom, more bullish, okay? However, you can also look at this and be like, you haven't seen anything yet, right? We haven't seen anything yet. Wait until this goes into backwardation. Wait until either September or October overtakes the following month. So if October pops up to the upside and all of a sudden you see the curve go like this from a wide margin, that could be the capitulation that the market is going to show you. But it stands right now, seeing that big move to the downside on, decent volume, but not anything crazy, right? It should have you on edge right now. It should have you very worried, because it can be both bullish or bearish. But what this states to me, what it points out, is saying the volatility, it's not subsiding right here. It's going to get downright crazy. And if you do not plan out key levels and think ahead of time, you're going to get waxed. It's just what it is. So that's why we're pointing out key levels. What level? Once again, we're pointing down here to the upside or to the downside where the rally kicked off. To the upside, we want to see it back above 4,200, potentially even above that 200-day moving average. If it did significant cracks below that, we're looking at the recent bottom to be tested again. Those are the only levels I care about right now in the midst of volatility, okay? I'm just trying to keep it as simple as possible right now, okay? And if we look at things like VVIX, all right, the MACD potentially curling over here. Where's the hedging taking place? We hardly even saw it pop off to the upside. That's interesting to me. If you look at skew, also same situation. Where's the hedging? This could be bullish, right? This could be very bullish, but it could also be like, hey, when when the real hedging kicks in, when the real selling kicks in, this is going to fire off and it's going to catch potentially a lot of people off guard. So you got to think about it in both terms. Do not just get stuck as a perma bull or a perma bear, because I promise you, if you're either a perma bear or a perma bull, you're not thinking correctly about this market. You need to think in terms of probabilities, where the risk is relative to the reward. And as it stands right now, yes, we're in a larger downtrend, which we all know, okay? And now we're starting to see a little bit of skews because we're moving into a period of expansion. And when things expand, people tend to do typically dumb things, all right? Typically dumb things in the midst of expansions. And this is where, you know, you can become incredibly wealthy. This is where wealth is just massively built if you're on the right side, because it's also where fortunes are lost. That's why I like to look at areas where they start contracting. Okay, when risk is minimized, and then I want to catch an expansion move, and I want to catch it the right way, and if I catch it the wrong way, I get out. It's as simple as that. But you need to be very disciplined in doing so. I'm kind of rattling on there. Let's take a look at the dollar. This is also interesting, right? The dollar was moving downwards. The S&P 500, right, was ripping higher because, hey, Powell's going to pivot. Well, not so much anymore. So this looks like, hey, a flight to safety, and it continues to be that as we're still kind of going sideways. At some point, the dollar's going to have to drop off, because as the higher the dollar goes, the worse it's going to be globally. All right, this is not a positive sign to see the dollar just skyrocket. This looks like a flight to safety. So if we continue to perpetuate to the upside, it's going to probably take down the S&P 500, and it's going to hurt global markets. It's going to hurt all kinds of things, okay? So when the Fed pivot actually takes place, or they subside, or whatever the case is, the dollar will probably most likely drop off. Okay, that'll be the peak in the dollar, and we'll probably have to start looking at things like gold to potentially be a huge beneficiary of that, but it's just not quite there yet. If we take a look at TLT, typically this is also a flight to safety. We're looking at the weekly time frame. Has not happened yet. Now we had a hammer candle here, it ripped up. I'm pointing out now because we have a hammer candle. Now you might think, okay, so if this starts moving up, yields, they're going to come down. That could be positive for tech, potentially. All right, but also if this takes off as a flight to safety, I wouldn't expect tech to benefit all too much. And as we stand right now, yeah. The longer end yields might be coming off, and that could be beneficial. But if you look at like the 10-year two-year curve, we're minus 33 basis points. We're still massively inverted. If you look at the 10-year 3-month, we're not inverted yet, but I mean, I'm pretty positive as we've been tracking it from over here. I'm pretty certain that this is going to be, telling us where we're going to be seeing this, and it's going to go negative at some point, I would imagine, right? But regardless, it's flatter than a pancake, and this look at the 3-month. It's completely parabolic. It's completely vertical. Okay, another thing to pay attention to is Dr. Copper. I like looking at Dr. Copper in correlation to gold, and you can use it a bunch of different ways, but it does give you an idea of, hey, how's the economy doing, right? Dr. Copper, that's why they call it Dr. Copper, and you can see we cracked down through a main area, boom, to the downside, and then, yeah, we're having a reflexive type bear market rally in copper. And guess who also is a beneficiary of that? Well, S&P 500 too. So when we cracked down through this, I highlighted these vertical lines, bam, we went to the downside. And the reason why I'm showing it again right now is because copper put in this pretty nasty looking dragonfly or inverse gravestone doji. I think that's what they're called. It doesn't really matter. Basically, it was very bullish and it completely reversed, closed as an indecision. Looks like a reversal type candle. So if this starts breaking down, we could very well start moving down too as well further here. Now, this also, if you're thinking in terms of, okay, where can we find risk and reward? Short copper could be a very good play right around these areas. So if you're looking at copper miners like FCX, FCX I think is a copper miner. I might be getting that ticker wrong. I'm pretty certain is that, or copper, right? CPER, I believe. Is it CPER? Gosh, I'm sorry. There's a copper ETF that you could potentially look into shorting, but it's giving us better risk to reward now, where we can be like, okay, we'll have a stop loss up in this area, but then the potential reward to the downside to retest the bottom could be quite significant, okay? Let's look at a couple indicators, and then we're going to just call it a day. If we take a look at the SPIP over GOVT, we measure and map the rate of change. It told us the other day, be on guard. Guess what? Right around the corner. Let's count it. That one definitely gave us the heads up notice, as we previously stated. Volatility shot off. It doesn't tell us how far and high it can shoot up, but it gave us the heads up notice, which was nice. This one too, measuring and mapping rate of change. I can tell you this, rate of change is one of my favorite indicators, if not the best, but it just depends on what you're measuring as far as rate of change goes and what time frame. This was measuring growth to value. rate of change. And we crossed down through 0 right here. And that was a warning shot. We said about the warning coming up here. We said it about here. And we said, okay, if it crosses down through 0, we've seen weakness. It didn't cross. It didn't cross. And then it did. Okay. And then it did. And then it came. And then we saw some weakness. All right. Is this just noise, or does this signal actually work? You just look at history and it played out to the downside. It just gives you a heads up notice. It didn't tell you how far it's going to drop. Doesn't tell you if it's going to turn back around. What would make me more bullish? I'd see this back above 0. And then as we already previously stated, I'd also like to see price action reclaim this Friday's move. That would make me feel a little bit more confident in long positions. But as it stands now, the trend is still lower highs and lower lows on the larger time frame. Okay, if we take a look at BP-SPX chart, still has room to drop into that negative oversold condition. So this could still continue to head down from an RSI standpoint. If you look at BP-INFO, this is tech. Tech got just completely obliterated, especially XLK on the day. It was down around, actually, well, look, I think it was down 6%, if I'm correct. Let's go up to look at that. 6%. Yep, down 6.2. Oh, sorry, 4%. It was it moved as far as the dollar amount goes on the ETF 6.24. So almost 5% move, which is still ridiculous. Okay, so that one here is getting into that oversold condition, right? 29.82, it's below 30, which could signal a potential bounce. Just like it was over here, and we started warning, things are getting overextended, and people are like, it's different, it keeps on running up, ha, 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 ha. Then we said the negative divergence, I said, careful, and guess what? We're seeing the weakness. Now I'm saying the flip side of it, it's getting back into oversold conditions. We can very well see a bounce. Look for a positive divergence to form, okay? That's how you have to just manage this. Don't short in the hole, because you can, 1, you can get lucky, or 2, you can get your face ripped off. I don't like those odds. If you look at the NASDAQ summation index, okay, we had the parabolic SAR uptick. It gave us a 4 or 5 day, 4 trading day heads up notice when it clicked over, saying that the trend still remained down. So if you want to also be more bullish, this would be nice to see the parabolic SAR start ticking back under it. Not the case right now, but when it does, I'll let you know. If we take a look at the NYSE summation index, so a more broader market, also 4-day heads up notice told us that the trend was potentially shifting. Incredibly important right here. I do notice that, hey, we have a low to a lower low, a high to a higher low, so potential positive divergence, but I want to see this start clicking back up to feel a little bit more confident, and then I'd want to see the parabolic SAR back under the summation index to identify there could be a change in trend. But as it stands right now, this could be the early start of a trend to the downside until we see it tick back, where we can potentially see it move higher. So you got to stand on guard. Okay, everybody, these are the expected moves for the next week. This is the upper level, the lower level. This sheet, it's typically has, products here, products there, but those are for my Patreon community. If you want to know how I pull these levels, I made a video of it. It's in the description. You can do it yourself, or if you don't want to do that, I charge $9 a month for the Patreon. But upper level, lower level, and this is right here, right? Boom, boom. So just screenshot it. IWM, Qs, SPY, those are the main ETFs that I like to share. That's all I got for you on today's episode, everybody. Be very careful out there during all of this volatility. All right, bye.